Joining me is Federico Brokate, head of U.S. business at 21Shares, who offers the world's largest suite of crypto ETFs. And they actually launched the world's first physically backed crypto ETP in 2018. So that was over in the European Union. Now, here in the US, they offer both spot Bitcoin and spot Ether ETFs, along with several futures based crypto products. But I think for me, the key point to highlight with 21Shares is this is a pure crypto fund provider. So they eat, sleep, and breathe crypto. This is a crypto native fund firm. And so let me welcome in Federico. I'm telling you, it is a pleasure to finally connect. I feel like we should have crossed paths a long time ago, but I'm glad to have you here. So thank you for joining me.
Thanks, Nate. It's a pleasure to be here and with your listeners as well.
All right. So it's interesting because you just came over to 21Shares back in June, correct?
Yes, I started mid-June.
Okay. And you were previously over at BlackRock, where you were the director of America's iShares business strategy, which, by the way, that included developing the go-to market strategy for the iShares Bitcoin ETF, which we can certainly talk about that if you'd like. But I guess to start, how long have you personally been eating, sleeping, and breathing crypto? I mentioned 21Shares. What about you?
Yeah, no, it's a great question, and thank you for highlighting the title and the roles there. I spent about a decade of my career at BlackRock, so I became a little bit of an ETF nerd from a professional capacity. Then, when it comes to crypto and digital assets, it was actually more something that I got into out of personal interest and necessity, if you will. I'm from South America. I was born in Colombia, and so, like many immigrants in the U.S., we often had to move U.S. dollars back and forth between our home countries and the U.S. And back then, in 2014, 2015, there was no easy TradFi way of doing so and sending dollars in a cost-effective way. So along came this technology called Bitcoin, which quite frankly sounded a little bit too good to be true. You could send money instantaneously to your family in a cost-effective way. And so that really piqued my interest on the personal side of things. And then if you fast forward to 2021, I'm well into my time at BlackRock. And I started researching 21Shares in particular because they were one of the first firms, as you mentioned, that were focused on democratizing access to digital assets. And they were using the ETF vehicle, one of my personal passions, as a way of doing so. And so it was really a great fit for me on a personal and professional level.
Okay. And so your role now, just to be clear, is head of U.S. business at 21Shares. What does that entail?
Yeah. So as you mentioned, 21Shares actually originally started in Zurich. We were based there, and our headquarters are there, and we have about 40 different products in Zurich that we've been able to manage, all specific to digital assets. So my focus for the U.S. business is how can we bring some of this expertise to our U.S. client base and pass along some of that knowledge as well. And so we're actively looking at growing our product suite and growing our client footprint. And making sure that we can spread some of that knowledge to people that are interested in the space.
I love what you said there, just in terms of spreading that knowledge and your expertise, because as you and I were discussing before I hit the record button, one of the goals that I have with this podcast is to really help serve as a bridge between TradFi and DeFi. And clearly that's a goal of yours and certainly 21Shares, which is why I thought you'd be the perfect guest for this podcast. But let me ask you this. How do you think that is best accomplished? Because obviously 21Shares is bringing crypto ETFs to market. And I've always said, I'm sure you've said the same, I actually think those products are a bridge between TradFi and DeFi. But putting that aside, there's still an education process that has to happen here. And so how are you and 21Shares approaching that education piece?
Yeah, that's a great question, and in my opinion, it all comes down to meeting clients where they are. Digital assets in particular, and I think I've seen this on Twitter and on different spaces, combine everything you don't know about technology with everything you don't know about finance. And so oftentimes we have clients that are, wondering, how do I incorporate this into the portfolio? What is the value proposition? What do I do? And so what we've been able to do at 21Shares is build a pretty broad set of educational materials that we use to walk our clients through how they should be thinking about digital assets. And so this ranges all the way from the basic 101 of, what is this asset and how does it look, all the way to the most advanced coverage of Bitcoin, Ethereum, and any altcoin that you can imagine. And one thing that I often think about when I compare digital assets to the other traditional financial ETFs is that not every client necessarily needs to have the same level of understanding. If I think about factor products or thematic ETFs, oftentimes investors understand the general value proposition, but don't know the exact mechanics in the background of how these products or the underlying securities work. And so for us, the ETFs are actually a fantastic way of democratizing access, to your point, and making sure that more and more investors can get access to, or exposure, if you will, to this asset class. Not everyone needs to know about hotkeys and cold storage, but they can understand the value of adding it to a portfolio nonetheless.
Well, let's actually unpack that a little bit because going back to my comment on spot crypto ETF serving as a bridge between TradFi and DeFi, I 100% believe that. But I'll tell you that a pushback that I'll hear, and actually I hear this quite a bit, is that these products stunt the education process because they actually make it too easy to access crypto, to what you're saying, right? Versus making a person set up a digital wallet and interact directly with the crypto ecosystem. So, basically the idea is that people maybe can learn better by doing, and crypto ETFs prevent that. What do you think about that narrative?
Well, look, I think there's a whole spectrum of clients, right? And at the end of the day, what these ETFs allow is institutional grade custody for access to some of these securities, right? And so at the end of the day, what we see is that different clients have different interest levels in understanding the underlying mechanics. And so where we love this ETF coming on board is anyone can access the market. And I think kind of, with our mission of democratizing access further, it's the perfect vehicle for investors of all types to kind of get involved. Now, what we are seeing from clients, even the ones that aren't necessarily crypto native, is they are interested in the asset class. And I think that's why we're seeing a lot of attention on the space. And even if they're using the ETF to, bypass cold storage or keys, if you will, they are still learning about digital assets, and they are actively participating in the market through the ETF.
Yeah, I 100% agree with you, obviously, because I think investors have to start somewhere. And
Yeah.
you and I both know some investors are going to be much more comfortable operating in the traditional financial services channel and doing so through the spot ETFs. And once they do that, the hope is that piques their interest, they get more comfortable, and that'll send them down the rabbit hole that you and I have both been down in the past. With the spot ETFs here in the U.S., I'm curious, just at a high level, how do you think things have gone thus far with the ARK 21Shares Bitcoin ETF, so ARKB, and the 21Shares Core Ethereum ETF, ticker CETH? Is it what you expected? Have these exceeded expectations?
Well, I'll start by saying that the launch at the category level has been a tremendous success, right? I think it's exceeded all of our expectations. With I want to say almost 19 billion in flows this year into spot Bitcoin products and a little bit over 2 billion into spot Ethereum if you exclude Grayscale. As a student of the broader ETF industry, to see a launch go this well and be this successful from year one is quite impressive. And I think a testament to how the broader industry and the broader financial market in the US is kind of adopting and incorporating digital assets. In terms of our 21 share spot product specifically, I also consider them to be a tremendous success as well. Our spot Bitcoin product, is third in total flows this year within the digital asset category, which is not bad for an issuer that entered the market less than a year ago. Similarly, with our Ethereum product, it's our first 21 shares branded ETF in the US, and we've started to see some fantastic momentum there that we're hoping to build on. And so I want to say, from an issuer perspective and from a category perspective, we couldn't have asked for a better 2024.
Who is buying these products, in your opinion? Because I'm sure you've seen there is some debate out there, which we don't have to get into all that, just in terms of who is actually adopting these. And obviously, with the ETF data, you can't always discern exactly who is buying product. But I'm just curious, anecdotally, or maybe with the data that you have seen, who are the buyers of these spot ETFs?
Yeah. So when I'm looking at client flows in the US, we typically subdivide it into three big buckets. And before I even say what the buckets are, I would say all of them are already showing fantastic signs of accelerated adoption. The first one I'll cover is really the retail investor. who has undoubtedly been one of the early adopters for these ETFs and really a significant source of what we call long-term sticky flows for these products. I think it was Coinbase that released a study that said something like over 50 million Americans own some form of crypto asset in the US today. And so that really just exemplifies the demand that we see already from retail clients and that we expect on a go-forward basis. The next big bucket is really the wealth platforms and advisors, right? And they manage the majority of all wealth-related U.S. assets. And we're starting to see a lot more appetite here, and we're seeing it pick up, although adoption by this big client group won't happen all at once. I think it's going to be a staggered adoption, especially as they go through their due diligence processes, especially as we near the year mark in January 2025. But when I think about over the next 3 to 5 years, who's going to be the biggest buyer of these products, it is undoubtedly in my mind the wealth platforms and the financial advisors in the U.S. Anecdotally, I was at a conference in DC last week, and it was all focused on financial advisors, and every single one of them said they either already own crypto in their client portfolios or they were exploring adding it if their home office approved it over the next 12 months. So even if it's not showing up in 13F data, to your point, we do know that the empirical evidence definitely points to rapid adoption by advisors. And the last bucket I'll touch on quickly is the institutional segment or the asset owner segment. And we're actually seeing quite a big divergence here in terms of how clients are using our products. We have some clients like the Michigan State Pension Fund and the Wisconsin Retirement System, right, which have slowly started to dip their waters and put out some test trades for spot products, but nothing really of the size and magnitude of the asset base that they have so far. So we're watching this really closely to see how it continues to unfold. And then on the other end of the institutional spectrum, we have clients like hedge funds. And we see this both with domestic hedge fund clients and international hedge fund clients who are using these products primarily actually for basis trading. And so when the basis is attractive, they'll enter. When it isn't, they'll exit. But when it comes to an international client perspective, the liquidity and the cost of some of these US products is just a fantastic value proposition. And so we see some international clients coming in as well.
That's such an excellent breakdown there because it shows the diversity of users of the ETF wrapper, which again, you've been in the industry for a long time, but I think sometimes that's an underappreciated point that ETFs can be used by all sorts of investors. And I'll just make a couple quick comments, which won't surprise anybody listening to this, which is, number one, I don't think there's any way to characterize the debut of the spot Bitcoin ETFs as anything other than a monumental success. You mentioned the $19 billion into these products. And here's the thing to what you were saying with some of these different channels. The larger wealth management platforms, some of these wirehouses, they haven't even approved these products for access yet among their advisors, or it's limited access. So that channel hasn't even fully opened up. And then I think about from the advisory channel or the institutional investor channel, what that due diligence process looks like. That's not something that typically happens overnight, especially in an emerging asset class or an emerging category. And so I don't want to be overly optimistic here, but I'll tell you, I am very bullish on what flows will look like moving forward because I just think we're still so early. Now, on the spot ether ETF side, I think there's some other dynamics there at play, but I still think that that's been a very successful debut. There's some noise there in terms of the Grayscale Ethereum Trust, the outflows there muddying up the water. Obviously, you had the Bitcoin ETF as the first mover, so I think that maybe took a little bit of the excitement away. But I think longer term, those are going to be highly successful products. Let me ask you this. So, obviously going back to your days at BlackRock, and I'm sure now at 21Shares, when you have a successful product launch like the spot Bitcoin ETFs, everybody starts saying, okay, what's next? And I'm sure you saw that last week we had an issuer file for an XRP ETF. And I know 21Shares filed for a Solana ETF back in June. Now, perhaps this will get us down the path towards discussing the regulatory environment, which I think I'd love to hear your thoughts on that. But high level, Federico, the narrative that I see here is that it might take a change in administration to get these products to the finish line. And I certainly don't want to get into politics, but the basic thought is that the current administration has been pretty hostile towards crypto, right? And we have former President Trump. He's out there messaging that his administration would take a much more crypto-friendly stance. And so again, putting all the other political stuff aside, I'm not asking you to comment on that. Do you agree with that basic narrative? Is that a potential linchpin here?
Yeah, so I'll actually just start by saying congrats to the Bitwise team on their XRP filing. We can't comment too much on live filings, but it's a great sign for the entire industry that there is more issuers that are looking to bring product innovation to the US in our digital asset category. At 21Shares, we're certainly working with regulators to make that happen. So it's definitely something that we have at the front of our minds and on our roadmap. Um, but I hear you. Look, the approval process for the U.S. right now is a bit uncertain, and we believe eventually it will mirror Europe. But in the near term, how long will it take until we get there? Um, when I think about Europe, though, it's typically a great barometer for where I think things could head. Right? We have over, like I mentioned earlier, over 40 products there, and those include Bitcoin ETFs, Ethereum ETFs with staking, Solana, XRP, DOT, you name it. So we have quite a diverse world of products in the digital asset category in Europe. And ultimately, this is great for investors because it provides the most choice and it provides the most access. And so I believe that in time, the US will reach a place where we look similar to Europe from that regard. Now, is it this administration or is it the next one? I would argue that it's almost regardless of who's in power and who's in the seat, we'll begin to see some support for our industry. And I'll actually point to something that doesn't have to do with product approvals, but has to do with our industry, which is the Bank of New York news, right? Getting around SAB 121. And so I take that as a fantastic sign of our current administration beginning to change their tune, if you will, around digital assets. Now, we're still a ways away from getting that diverse product set that I mentioned earlier, but from our perspective, Washington has turned the corner and has really gotten to a place where, regardless of which party is in power, we'll start to see additional support for digital assets.
It's so interesting, and I talked a little bit about this last week, but as I look at, let's just stick with the ETF space specifically right now. We still don't have in-kind creation and redemption for the spot Bitcoin and Ether ETFs. There's no staking on the Ether ETFs. It does look like options trading is finally coming, at least on the spot Bitcoin ETFs. But even that, I feel like is really taking a while to come to market. What needs to happen specifically in order to move crypto ETFs forward, to include having products like XRP and Solana ETFs? Does it go back to what you were saying in that you mentioned Washington turned the corner? Is this just time, that we're just still so early that we just need to give this more time for the regulatory environment to evolve? Or is there something more that's needed here?
Yeah, look, I think time is undoubtedly something that we're going to need to give regulators to be able to get to a place where we have the diverse products that you're mentioning and that we would love to see in the US. I personally have a wish list of regulations that I would love to see come to market. Amongst those, I would mention, if you're familiar with European regulation of digital assets, MiCA, it does a few things really, really well, right? It's focused on protecting investors. It regulates stablecoins. It's establishing a great framework for how to issue and launch new cryptocurrencies. And it really provides the guide rails for what could be wrapped in an ETP and what can't. And so this type of transparency, I think, in the US would go a really long way. However, we're probably some time away from seeing that come to market. The other big thing that I would say when it comes to ETF products I would love to see some consistency across regulators. I would love to see a unified approach between the agencies, whether it's the SEC or the CFTC or anybody else for that matter, in both how they classify digital assets and how they treat them. And I think this would ultimately be a great benefit, not only to issuers and market participants like us, but for the end investors, right? And at the end of the day, the owners of these ETFs.
It's an excellent point, and it's really why I'm a strong proponent, I know you are, of having a real crypto regulatory framework put in place, which I think obviously will take Congress to have that happen, because to your point, we don't have the regulators all on the same page. I would actually say in certain cases, it seems like there's a little bit of conflict between regulators who are essentially fighting over jurisdiction of the underlying assets. And so I think we need to get that regulatory framework in place. And obviously that'll help offer clarity to the entire category. Going back to the adoption of crypto ETFs, and I would say really just crypto in general, I'm not sure if you saw this, but there was a survey that was conducted earlier this year by Ernst & Young. It was in partnership with Parthenon, and they surveyed something like 1,000 plus retail investors on digital assets. And one of the interesting findings, at least to me, was that while Bitcoin was the most owned digital asset, and that's no surprise, and Ethereum was solidly number two, 66% of investors had moved beyond those two assets, and they now owned altcoins and stable coins. And so if I bring this back to the ETF world, you've mentioned all of the different products that 21Shares offers over in Europe, right? Cardano and Solana, Polkadot, Uniswap, the list goes on. I'm curious, is that the path that you typically see investors walk, where they'll buy, say, Bitcoin first, then maybe get comfortable with Ether, and then they'll branch out from there? Is that sort of the natural path an investor walks?
Yeah, that's absolutely right. So I think, Bitcoin and Ethereum almost in a category of their own, not just from a brand recognition, but from an overall portfolio adoption place. They're much further along, I think, than the rest of the altcoins. However, that said, when we look at our European business and when we look at our ETPs that track some of these altcoins, we actually tend to see two different types of buyers. We see momentum-oriented investors or traders, if you will, like hedge funds and prop shops at banks. And they're really focused on the technicals and market discrepancies, and they trade across the full spectrum of digital assets. And so they will definitely sit within that 66% of investors, if you will, that are open to exploring beyond just the Ethereum and the Bitcoins, and trading for profit making purposes. The second category, which I would argue is one that we spend a bit more time on, are the value investors, right? So I think about family offices, pension funds, and really the owners of some of these assets. And they're much more focused on what the investment thesis and the fundamentals of each one of these projects and tokens are. And so in these cases, they're typically looking for what is that next blue chip token, whether it's Ethereum or Solana, or what is the next platform that's going to scale and take off. And so they like using the single asset ETFs as a way of expressing those views. Some prefer to invest in infrastructure, right? So if I think about layer ones, layer twos, layer zeros, and then others prefer to look at applications, right? And looking for the next NASDAQ or Facebook or Venmo, if you will. I think last cycle, the big focus was on finding the next Ethereum. I would venture a guess to say that the next cycle will be much more focused on applications and specifically in the DeFi world.
Let's say, I do want to ask you about DeFi here in a moment. Let's assume regulators do get comfortable with, say, a Solana ETF or an XRP ETF. Any sense as to what demand might look like? And I know that's a difficult question to answer. I'll tell you the way that I've always viewed this is to look at what the underlying market cap of the assets are relative to one another. And I would expect the ETFs to roughly reflect that. So very crudely, let's say that Ether has 25% of the market cap of Bitcoin. That's what I would ultimately expect the ETF demand to look like over a longer period of time. Do you think that's a fair way to look at it, or is it more complicated than that if you start thinking down to other crypto assets such as Solana and XRP?
No, I think that's the perfect way to look at it. And in fact, when we were looking at launching our Ethereum product in the US, that's how we kind of built our multi-year projections, right? Was how do these two products stack up from a market cap perspective? And that can ultimately dictate how client flows end up trickling down as well. And this is a high level assumption, but when we look at the actual data, whether it's in Europe or whether it's in Canada, that's exactly how we've seen it play out in both of those markets. If you look at European flows, Bitcoin tends to capture 2/3 versus 1/3 for Ethereum. And so it is very closely market cap weighted. Now, that said, a lot of these projects have really strong communities that have been supporting them for a long time. And so especially the two that you mentioned just now, we think there's first off, a strong retail demand for both of those tickers. And then secondly, I would say explaining this value proposition to more clients, especially on the institutional and on the wealth advisory side of things, could completely change the flow dynamics for these products as well. And so I think there is a built-in demand for some of these products, but then the upside for them as you kind of do more education and bring clients along in terms of their investment journey for these different assets could change the game entirely.
You mentioned DeFi earlier, and we only have a few minutes left here, but I'll tell you that has been a recurring theme throughout my first few episodes, in specifically tokenization. And so to close, I'd love to hear your views just at a high level. And I'm sure you saw last week that Visa, they announced the launch of a platform that the goal of it is to help financial institutions issue fiat-backed tokens on Ethereum. And of course, there are already other tokenized products out there, tokenized money market funds. We've seen from several larger asset managers. There are plenty of other real-world assets being tokenized. But just at a high level, how do you see that space evolving?
Yeah, tokenization certainly has the potential to absolutely revolutionize, I think, all of our financial lives. I spent the larger part of my career talking about how much better ETFs are as a wrapper to technology than mutual funds. And so ultimately, you can kind of see that comparison going down the path for ETFs and tokenization as well. Um, Long term, my point of view is, and this is just my opinion here, I think all securities will be tokenized. I think that's going to lead to more accessibility, more efficiency, and quite frankly, more innovation in capital markets. And I think if we stay on this path, it could be as soon as the next generation thinking that our current asset management and wealth management ecosystems are antiquated. Just how I think the active mutual funds with high fees and low alpha are antiquated. So from that perspective, yes, I think tokenization could become the ultimate ETF killer. But these things sometimes take decades, right? There are still some pockets of mutual funds that are capturing flows today. And so it's not going to be an overnight shift, but it'll definitely be a gradual one, and something that I am also very keen to follow and keep up to date on.
I 100% agree with you. It's so funny because, I've sort of branded myself as the ETF guy out there. And I'm telling everybody, I think ultimately tokenization will replace ETFs as the preferred vehicle or wrapper of choice. And I think anybody who has covered this space, to what you were alluding to, we've seen that happen with the mutual fund wrapper and the evolution to the ETF wrapper. I think for anybody to sit here and say that the ETF wrapper will never evolve beyond what it is today, that doesn't make sense. We know that society progresses and technology evolves. And so to your point, are we talking about a decade? Who knows what the time frame is? But I 100% agree that's the direction of travel. But Federico, greatly enjoyed the conversation this week. Congratulations on all the success so far at 21Shares. I love to see it. Thank you for joining me.
Thanks for having me. It's a pleasure to be here.
That was Federico Brokate, head of U.S. business at 21Shares. I sincerely hope everyone enjoyed this episode of Crypto Prime. Be sure to leave a review or give us a like wherever you're listening or watching. I always appreciate that. And I'll be right back here next week with another fantastic guest. So thank you for joining me.
Crypto Prime is hosted by Nate Geraci, president of OTR Media LLC. Nate is also president of the investment advisory firm The ETF Store. While OTR Media LLC and the ETF Store are related by common ownership, they are separate and distinct entities, and anything discussed on this program should not be construed as an official statement by the ETF Store. This program is for informational purposes only and does not constitute investment advice. Investing in crypto assets involves substantial risk, including the potential loss of principal. Any past performance figures discussed are not necessarily indicative of future results. Visit CryptoPrimePodcast.com for more information.